Hello everyone, myself Tirth Barpaya. Good morning, good afternoon, good evening. How are you all? Hope so you all are fine. So today I'm going to discuss the concept of taxation of investment fund, which is basically a topic of CA final direct tax applicable for assessment year 2020-2021. Before going further, please help yourself. The notes of taxation of investment fund is already prescribed in the description column below. Now, what is meant by investment fund? It means where a supply of a capital belonging to numerous investors used to collectively purchase securities while each investor retains ownership and control of his own shares. It means when numerous investors invest in a fund, their money is pooled together, after which the fund manager buys, holds, or sells the investment on your behalf. All funds are made up of mix of investment. For example, equity mutual fund, debt mutual fund, hybrid mutual fund, it's a mixture of equity and debt, growth mutual fund, dividend growth, etc. So, because of which diversification of risk can also be found. Type of investment fund are mutual fund, exchange traded fund, money market fund, hedge fund, etc. Now, coming to the taxability of investment fund. When any unit holder is investing in any investment fund, the fund manager, as we have discussed earlier, he analyzes the risk and then buys, holds, or sells the investment on your behalf. Because of which, at the end of the year, any income generated is transferred to unit holder. If such income is PGBP income and such investment fund is company or a firm, then they would be liable for tax at the rate 30%, and in case of others, it would be liable for MMR. It means it could be AOP or BOI, etc. It would be taxable under section 1023 FPA. PGBP taxable is, as we have discussed, that in case of others it would be taxable at the rate MMR, which means 42.744%. All other income would be exempt. Now, when such income is transferred to unit holder, then they would be liable for tax under section 115 UB for other income at the rate normal tax rate, and for PGBP income it would be exempt because such PGBP income, the tax on which is already paid by investment fund under section 1023 FPA. Moving further, in such case when the income is transferred from investment fund to unit holder, TDS under section 194 LBB is also to be deducted at the rate in force under section 195 if such unit holder is NR or FC, which means non-resident or a foreign company, and TDS is to be deducted at the rate 10% in case of others. It means individual, AOP, BOI or partnership firm, etc. In such case, no DDT under section 1150 is to be paid by investment fund on the transfer of income. Moving further, investment fund is compulsory required to file ITR under section 139 4F. Moving further, if any income accruing, arising, received by fund and such is not paid to unit holder, then it shall be deemed to be credited or paid to unit holder on the last day of the previous year, and such shall be taxable to unit holder. Other topic is also that when such income is already taxed to unit holder at accrual basis, then when the cash is received, it would be not taxable because it is already taxed at accrual basis. Moving further, here's the concept of carried forward and set off of losses in case of business loss and other loss arise. In such case, when there is a PGBP loss, it would be carried forward and set off by investment fund only. Other than PGBP loss, if unit holder hold unit for at least 12 months, then it would be carried forward and set off by unit holder themselves. And if the unit holder held unit for less than 12 months, then in that case it would be less. Moving further, for example, If the PGBP income is say for rupees 7 lakh, capital loss is say 2 lakh 50, IFRS loss is say 1 lakh 50. Now, number of unit holder is say 20. It is assumed that units are held for at least 12 months. In such a case, as we had said earlier, other than PGBP loss, it would be if the unit holder held for at least 12 months, then it would be carried forward and set off by unit holder. So here, CG loss is to be carried forward by unit holder itself. So in that case, 12,500, it is to be carried forward and set off by unit holder. In the case of PGBP loss, it means it is to be carried forward and set off by investment fund. So here, PGBP income, it is to be set off against IFRS loss. It means 7 lakh minus 1 lakh 50 remains to 5 lakh 50. It would be income taxable by investment fund. And suppose if there is a loss, then it would be carried forward by investment fund only. Now, conclusion to the topic, common point for business trust, investment fund and securitization trust. Breakup regarding nature and proportion of its income and other details is to be prepared and submitted to unit holders or investor up to 13th June of the following previous year. And in case it is to be prepared and submitted to income tax authorities, CIT and PCIT, up to 30th November of the following previous year. For example, for the previous year 1920, the breakup would be prepared and submitted to unit holders up to 30th June 2020, and it is to be prepared and submitted to income tax authority up to 30th November 2020. So here I am concluding the topic. Hope you find this video useful. In case of any query or suggestion, please do comment in the comment section below. Please like and share the video with your friends. Also, please do subscribe to my channel for more of such useful videos. Also, don't forget to click the bell icon to stay tuned and connected with us. Thank you.